Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for weekly and monthly cash flow. Today is Tuesday, October 31st, and it is 11 p.m. Now, to be totally honest with you guys, there's not a lot for me to talk about today because I made a couple of mistakes last week and I got stuck with 5,000 shares of one company, 5,000 shares of another company, so I have no money to play with. But I'm going to go over a few of the trades that are available for tomorrow or the next day, and I'm going to answer a couple of questions. So, all that being said, let's jump on in and see what's going on. Now, it was a down day today and yesterday, so let's quickly take a look at what's going on. All right, this count right here is our dividend on steroids, where we look to capture a certain amount of run-up going into the dividend. You know, we like to buy 10 days prior to the EX date and sell for a little bit of a profit coming up into it. We look at a 2.5% profit on each of our shares. But all that being said, let's see where we stand and see where everything is sitting at the moment. First on the list is going to be CLX, which is Clorox. And Clorox is at 123.53 today, but Clorox started out the year at 119. Took a couple of weeks for it to find the low of the year at 111. From there, she jumps up back up to the 121 area, travels there for a couple of months, and then shoots on up rather rapidly to sit at 134.85 for what looks like 7 or 8 months, before she drops down to 130 for about a month, and now she's at the 126 area. Now, we seem to have Clorox at 131.22. Now, it hasn't seen 131.22 in, I don't know, 10, 11 days. Not that long ago. All right, so it's not that bad. We got it on the 13th, which is almost at the high. Now, why did we not hit at the high? We got 131.22, and we had a target of 134. And we had a high over here at 132.25. So we're a little bit off. Don't get me wrong, you know, Clorox has been around for over 100 years. They're going to come back, and we'll get out when we hit our target. Okay, that's Clorox. Lowe's. I'm a little disappointed with Lowe's because she got the dividend coming up, and for some strange reason, she went down rather than going. But anyway, neither here nor there. All right, Lowe's starts out the air at 66.25, which is right about the low of the year. And it looks, I don't know if you want to call this a triple bottom or not, but she's right on the 65 area for about 2-3 weeks. And then she finds a trading range of 72 for about 3 months, jumps up to 82 for about 2 months, hits 85, which is the high of the year at 86.20. 85. They traveled there for about a month and then drops back down to what looks like, I don't know, trading range of 73 to 80, and she seems to have settled into where she is now at 79.95. Now, where are we with Lowe's? All right, 79.95 is where she settled, and right now we bought in at 81.75, and we're looking for a target of 83.80. Now, you see those two sell orders have the 2.5% added in, which means we haven't owned them that long. Okay, so this week, these things will be going EX, and I'll be collecting the dividend on them this week, and then we change the exit price because we didn't make the 2.5%, so we're going to collect the dividend and get on out with a small profit and move on to the next stock, hopefully. Now, Macy's. Oh, Macy's is my big loser for the year. I've never had a stock that just tanked the way that Macy's has. And I've been investing for, I mean, I can't really say that because around 2000, I'm the only person I know of that got a phone call from my broker telling me, hey, Jim, you're done. You're done trading. We're going to liquidate everything you got. No, I'm the only one who got that phone call that I know of. Macy's. A year ago was at 36.09. Took a couple of weeks for hit the high of the year at 45. 553 was the high. Now, she didn't stay there very long. She only stayed there for what looks like about a month, and it was a slow downturn until she hits a trading range of 29 and trades at 29 for what looks like 5 months. And then she stair steps down to where she is today. From 29, she stair stepped down to 23, stair step down to 20. Now, she's at 1876. Look at this gap down. Now, I'm hoping that this gap fills and then continues to go up, because look at what we are with Macy's. We got Macy's at 33, and she's at 18 right now. That is almost a 50% increase. Actually, there's more than a 50% increase for us to get our exit. Yeah, because at 50%, 18, that's 9, that's 27. Yeah, well, like 60%. This thing has to go up 60% before it hits our target. I don't see that happening anytime soon. So it looks like we'll be collecting more dividends on this. So as you can see, we collected dividends 3 times. And we should have another dividend collection in February if we continue to hold this. All right. That was Macy's. SKT. Looks almost exactly like the Macy's chart. Oh, my goodness. She starts out the year at 34, goes sideways for about 4 months, steps down to 32 for about 2 months, drops down. It's not a step, this is a drop. Drops down to 26 for about 3 months, drops down for 24 for about 3 months, and yet again dropping down to 22. Okay, she's at 22.75 at this moment, and we got it at 32. So this is going to take almost a 50% increase for it to hit our target. That does not make me a happy camper. All right. Now we have some money to play with on this one. I believe we have like 29,000 sitting around. So let's see what we can look at. That would be helpful to us. October 31st. So we're looking at 10 days from today, which would be 31st, which would be the 14th. So we're looking at stocks for tomorrow, the 15th. Sorry, the 14th. Here we go. 51 companies. Let's go through a few of them and see what we're looking at. Oh, look at that. AIT. I know that one. AFL. Aflac. Ooh, Aflac. JBL. International Paper. Hilltop Holdings. Home Bank Shares. Hennessy. Ooh. The Gorman Rupp Company. W.R. Grace Company. Green County Bank Corp. Okay. Greenbrier. Exelon. Oh, Consolidated Edison. Core Energy Infrastructure. How lovely. What else we got? Collectors Universe. Oh, CF Holdings. CF Industry. I think that's a shipping company. I mean, a trucking company. Bar Harbor Bank Shares. Anyway, there's 51 companies for us to look at just for today. All right, that being said, let's shoot down a little bit. Zion, ooh, Yum Brands. Now, Yum Brands used to be a Dividend King. Now, Dividend King is a company that has increased their dividends for a minimum of 50 years. I mean, every single year for 5 decades, they've given out more and more money to their investors. Now, I say used to be because just recently, within the last year or two, they decided to stop increasing their dividend payments. Imagine that. 50 years of increased payments, and then all of a sudden they stop doing it. That is amazing. All right. All that being said, Target, you've heard of Target. ULT, Unitil Corp. I haven't even heard of some of these companies. Cimarex Energy. Winnebago Industries. I didn't know that. Imagine that. All right. Anyway, these are all the ones for us to choose from. Now, I suggest for you guys, do your research. Find out which companies are best suited for your needs. For me, it is plugging it into the software that I've created and finding out how it reacts directly related to the EX dividend date. Now, a lot of companies, I'm not saying all, a lot of companies have a tendency to move up in price coming into the EX date where they're going to pay out the dividend. Now, the EX date is the last day the stock trades before the dividend's paid out, which is a good reason for people to invest because a lot of people want that cash flow. If you buy the company, you can get 4 dividend checks a year, or what I suggest people to do, buy the stock, grab the dividend, get out, buy the next company, and then grab that dividend too. Just keep on doing it. Turn it over. Make your money work. It only takes 5-10 minutes a week to do something like this. That's what the software is so important, because we have all these companies to choose from. Best bet is come over here to the top right-hand corner, click on this, and you can print it now, where we can export the file into WordPad or Microsoft Office, and then you cut and paste those into the software, and then it spits it out, and it tells you all the pertinent numbers that you need right off the bat. Bum, 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 bum. There you go. And it allows you to eliminate the companies that don't increase their dividends or takes a very long period of time for them to move in a certain direction in which you want to do. Now, it's all based on historical performance. What did it do last year? What did it do the year before? What did it do the year before? Because let's face it, Winnebago, they make motorhomes. They've been making motorhomes since the 1960s, maybe even earlier. I honestly don't know. But they make motorhomes. Same thing, day after day, day after day, day after day, year after year. Is it anything interesting, anything new? No. Here, Eli Lilly, what do? Probably the same thing over and over again. KR, Kroger. It's a grocery store. Kroger, they buy and sell groceries. You go to your grocery store, you buy groceries. Nothing new every day. People go in, the cashiers go in, they ring up your thing. The stock clerks go in, they stock the shelves. The manager manages everybody. So nothing new, nothing interesting. It's the same old routine day after day after day. So that's why historical performance is so important. Because you have a huge corporation. Now, Kroger is a huge corporation. JBL, huge corporation. Granted, the dividend is crappy, but International Paper, what do? They make paper. They're offering you a 47-cent dividend. Not a lot of money, but hey, if you have 1,000 shares, that's $475, I think. Yeah, $475, 1,000 shares. You collect it, sell it. After you collect the dividend, buy the next one. What's the next one? Who knows? Yesterday, you had all these companies right here. WEC, an Energy Group, Provident Financial Holdings, Picard Incorporated. And then the previous week, you had all these companies. Yeah, you get 33 there, 36 last Monday, 33 last Tuesday, 27 last Wednesday, 55 last Thursday, and 26 the next week. Oh, look at that. ExxonMobil. What is that? Helmerich and Payne. I don't even know who they are. But I've done that before. All right, anyway. Those are all the companies that are available. Now, to go through those, each individual will drive you nuts because you don't know. By looking at this right here, it doesn't really tell you how old the company is, how often they paid out their dividends, and how often they've increased their dividend payments. This information doesn't tell you anything other than who the company is, what the dividend is, the announcement date, the EX date, the date of record, and the payable date. There's 4 days to remember. The announcement date, and the company tells you you're going to have the dividend. Number 2, the EX date, which is the last day the stock trades before the dividend is paid. And the most important date But there's two very important dates. But the most important date is the date of record. Because if you own the stock on the date of record and you've already gone through settlement, because you have to be owner on record for minimum of 2 days to be the owner of record. So if you bought, okay, so the date of record is the 13th. If you bought the stock on the 12th, you haven't gone through a settlement, which means all the T's crossed, I's dotted, paragraphs checked, and punctuation checked, all that crap. You're not actually entitled to the dividend. So whoever owns the stock on or before the EX date and holds it through to the date of record is the person that is eligible to collect the dividend. So you buy it anytime before the 10th, buy it the 9th, the 8th, the 7th, the 6th, anytime before the EX date, and hold it through the date of record. Then you are entitled to the dividend. Okay, now this is only a 3-day period. Well, not necessarily so if you think about it, because Friday is the 10th, okay, and the 13th is Monday. So it's like the very next day because it is a stock, and the stocks don't trade on the weekends. Okay, so you buy it on Friday, or you buy it before Friday, and you sell it Monday or Tuesday, and then you can go and you buy on the 14th or 15th. Buy more. For some strange reason, this account doesn't allow me to see past 10 days from today. So 10 days from today, which is the 31st, is the 14th. If I wanted to see 11 days, 13 days, the 15th or the 16th, I have to wait until tomorrow to see tomorrow's, then you have to wait until Thursday to see Thursdays. But on my other trading account, which is options, oh, that's good. Oh, this one's taking its time to settle. To load. There you go. Let's clear the filter. There we go. October 31st. There you go. Look at that. Isn't that lovely? Ooh, check that out. 42 companies today, the EX date. Okay. Tomorrow, November 1st, 16 companies. Thursday, 43 companies. And Friday, 60. Okay, so as I was saying, we go into November. 10 days from today is the 14th. Okay, this account allows me, for some strange reason, to see as far as I want to look. But you know something interesting? Oh, look at that. Johnson & Johnson stands out like a sore thumb. These companies have already been listed. Now, interesting thing, if I go to here, look at the announcement dates. Okay, the 30th, 31st. So this week. Okay, so yesterday there was 56, today there's 42, 60, so on and so forth. So we're looking at the 16th, right? Are we looking at the 16th? Okay, so November 1st. Look at the announcement dates. You have the 20th, which was, 10 days ago? This is, 8 days ago? All right, yeah, 8 days ago. Where did one go that was just like yesterday? Third, 26th, 27th. Like 4 or 5 days. Look at these. 1, 2, 3. 3 companies announced that they're paying out a dividend last week. And like it gives you 5 days to react. And look at this. They announced on the 26th that they're having dividends. And that the 26th was, hold on a second. That's the 3rd. And the 26th was last Thursday. Last Thursday, they're telling you, hey, next Friday, we're paying on our dividend. It doesn't give you a lot of time to arrange your financing. And can you buy them 10 days prior to? No, you can't, because they give it to you 5 days prior to the dividend date. So when I look at 10 days to the EX date, I have the 15th, these 18 companies, all right, 4 of them announced on the 31st, which was today. They're announcing in 10 days we're paying out our dividend. Okay? Yesterday, these guys say, hey, we're paying out our dividend in 11 days. So on and so forth. You know, Microsoft, hey, they said last month, hey, we're paying out our dividend in a month. Gives you plenty of time to act, react, do your research and whatnot. So what I'm trying to say is you don't always have 10 days prior to in order to figure out what kind of investment you're going to make. All right, so that being said, let's see where we are with our trades this week. Now, like I said, I had one fill today, and that was I sold the covered call for Lowe's because it had a nice price to it. You know, 57 cents per share times 200 shares. You know, it gave me, you know, $100 or something like that, which is nice because it's a weekly. You know, can you imagine that? You buy you know, 200 shares, and then every week you get, you know, $100. That's great. Works for me. All right, because you're just rolling over the same money. Because think about it. You have your money in an investment, and how much money are you getting off that investment every week? Okay, Lowe's is a household name. It's been around for generations. Okay, they've been around for quite a long while, and I believe Lowe's is a dividend king. They've increased their payments to the dividends every year for a minimum of 50 years. So more than 50 years, they've always increased the dividends. But the neat thing, like in 1973, when they introduced options, Lowe's has options. Not only monthly options, it has weekly options. So I can buy Lowe's, household name, right? As long as she stays. Let's bring up Lowe's for a second. L-O-W. L-O-W. All right. Right now, all right, let's go through the whole thing here for a second. Open this up a little bit more. All right, Lowe's starts out the year at the low of the year around 66. Didn't take long to find a trading range of 72. Then she jumps on up to 82. It's a $10 increase. Trades at 82 for about a month and tries to find a high of 86.20. But she travels up in the 84 to 86 area for a little over a month. Drops back down, stair steps down to 79, and then drops down to 77, and then even to 75 before she comes back up to the 79.80 area. Okay, so if you looking for a nice cash flow, you can get these weekly options. These companies that offer weekly options. You buy the stock and you sell an option for someone to buy it from you. You buy it on a Monday, and on Monday, you buy it Monday morning, and like Monday afternoon or whatever, you sell someone the option to buy it from you for the exact same price you paid for it. So it's like, here's $1,000. All right, at the end of the week, you're giving me $1,000, but for that privilege, you're giving me $100. So I'm making a return every single week by buying a stock, a good, solid company stock, like a Dividend King or a Dividend Aristocrat, someone that has a nice history to them, household name, and has been around for a long time, and has increased their dividends for a very long time, and buying them and selling them for the exact same price, but collecting a premium. Okay? Worst case scenario, Lowe's goes down. All right, Lowe's goes down. It's a household name. They're not going out of business tomorrow. Okay? They pay their dividends every 90 days. So every 90 days, I'm collecting a dividend. And if I'm fortunate enough, every week I will collect a premium from the shares that I bought. Okay, so if I buy, let's say 1,000 shares, I can sell 10 contracts. 10 contracts, let's quickly find out what that is worth. All right, Lowe's Right now it's $79.95. So if I buy it at $79.95 and I sell someone the option to buy it from me at $80, I can do that at 52 cents per share. So, well, let's do this for the fun of it. All right, well, let's delete that. All right, let's buy, let's say 1,000 shares. Okay. Now I can't buy that. I'm just gonna walk through this and show this to you. All right, 1,000 shares, $80 a share. It's gonna cost around $40,000. Now, don't get me wrong, $40,000 sounds like a lot of money. Actually, it's gonna cost $80,196 for 1,000 shares of Lowe's. All right, that might be a lot of money for some people. On reserve, hold on a second. Margin. On margin, it's only going to cost $40,000. Okay. Now, let's say you have your IRA and you get $40,000 or $80,000 just sitting there doing nothing. You know, collecting. If you have it in a CD, you're collecting 1% interest. Now, let's get out of there. Now, I'm going to sell someone the option to buy that from me, $80,000. I'm going to allow them to buy it from me for $80,000, which is basically the exact same amount I paid for it, because right now it's at $79.95, and I'm going to give them the right to buy it from me on Friday, or anytime between now and Friday, for $80, and for that privilege, they're going to give me 52 cents a share, or also known as $505 or $520. Okay, but after the commission of $14, I walk away with $500. Okay, so I have this money sitting in my IRA or my retirement account or wherever. I buy Lowe's, and then I let somebody buy it from me for the exact same price I paid for it, and for that privilege they give me $500. And guess what? I could do it again next week, the week after. And if I'm fortunate enough, I could be able to collect the dividend in the meantime. All depends on how you plan it out and how you do your timing and how you do your trades. All right, that being said, let's see what we're looking at. Wednesday the 15th. This is what we're looking at. 18 companies. Is that right? All right, the 15th. Microsoft, 42 cents. Let's see what the Microsoft people look like. MSFT. Oh, see, I don't know if that's good or bad. Let's just walk through it and let me show you what I mean. All right, Microsoft starts out the year at 59. Quickly finds the bottom at 57. From there, it's a steady upgrowth. Now, this is like a beautiful looking chart. Nice upgrowth. All right, there's some buying, there's some selling. So, you know, there's a profit taking, up profit taking, up profit taking, profit taking. Now, look at this. This is interesting right here. Now, they got the dividend coming up in 10 days. So you got this nice little gap up. Now, what is this gap up for? What happened in Microsoft to make it go from 78, 79 up to 84? I mean, that's a nice little jump, you know. She closed at, what was it? She closed at 78. What caused the market to make it go closing on 78 on the 26th to opening 84? That's a $6 increase, a little bit over 10%, or close to 10% in one day. Why the 10% increase in one day? I mean, it's nice had you bought here, and then boom, you wake up in the morning and you're a 10% increase. If you had options, that's like a 100% increase overnight. But let's not go there. I don't like playing the what if, could if game. So you got Microsoft. More like, let's trade Microsoft. Let's delete that. Okay. So let's say hypothetically I buy Microsoft at 83.30. Okay. I have a couple options. I can sell someone the option to buy it from me at 83 for 60 cents a share. but it's not really 60 cents a share because I'm paying 83.30. And if I sell it for 83, I'm losing 30 cents off the bat. That's why I'm collecting that 60 cents. Or I could sell the 84s for 20 cents a share. Whatever you want to do, you're buying it. You're buying a well-known company that's been around for quite a while. It's not going anywhere. They're a very important company, and you can make a nice little profit off of that. Buy it, sell it the same week. You're better off than you were when you started. All right. So that being said, that's a good plan because Microsoft is going to have their EX date on the 15th of November, which is 10 days from today. Well, 10 days from tomorrow. 10 trading days from tomorrow. All right, all that being said, I'm basically done. See if I have any questions or I can get out of here today. No questions. Gotta love it. All right, that being said, that's what we can look at. You guys have any other questions, let me know. I'm here to help. And all that being said, I am out of here for the day, and I will catch you guys tomorrow.